please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Mangalam Malu. Mangalam, good afternoon. There's weakness in the markets today, and in the last few minutes, the markets have actually slowed down further at around lunch hour. In fact, midcaps are doing slightly better than the frontline indices like Sensex and Nifty at this point, but still 0.25% drop in midcaps as we speak. Bank Nifty also down almost 0.4%, and ICICI Bank is a big drag on the markets. Advanced decline also looking weak, and it's the global cues along with the FNO expiry which is weighing on the markets, Mangla.
Absolutely, you said it. You know, the FNO expiry, this series has belonged to the bears. The Nifty's lost about 700 points this series itself, the largest that we've seen in a decade, and looks like the next half could perhaps belong to the bears as well. Given the 10,400 call, the premium is all but eaten out there. 27 lakh shares added, but the next fight perhaps could be for the 10,350 mark. Why do I say that? Because the 10,350 put, that one's seen some bit of writing. The premium out there is around 22, but the 10,350 call too has seen some writing out there. The premium around 20, 21. So put both of them together, 10,350 call and 10,350 put, you're playing for a premium of around 40 rupees. That means, are the traders looking for a range of 10,310 to about 10,400 thereabouts in the remaining part of today's trading session or not? That is something we have to watch out for. But talking about watching out for, we got some news on KPR Mills, 108 crore rupee worth buyback that the board has approved. The stock spiked a bit, but mind you, their market cap is what, about 5,500 crores. So it's a very minuscule thing as far as the overall acceptance ratio is concerned. So maybe we'll keep an eye out on that one.
And also some bit of news coming in on Reliance Infra, which has bagged an order worth over 3,500 odd crore rupees. So that's one other stock to watch out for. But we have been tracking the markets, and global cues are also very important for the Indian markets today. Let's do a check on the Asian markets, which closed mixed, with only the Shanghai index really ending in the green. Nikkei recovered slightly from the morning lows, but closed 1% lower. And the European markets, they seen lower as the US rate risk really impaired sentiment, and the Fed released the minutes from its January meeting, and the minutes showed that officials see increased economic growth and an uptick in inflation as justification to continue to raise interest rates gradually. So that's one of the important points we are watching out for, especially the FOMC minutes, which are impacting the global markets, including ours, Mangla.
That's right. You know, the Dow yesterday corrected about 500 points from the high point of the day, and as we speak, the Dow futures is down 160 points. So we'll keep an eye out on how that pans out. But first up, here's a word coming in from Manishi Raichaudhary of BNP Paribas on the new global economic scenario. Surging yields, higher than estimated Fed rate hikes. What does that mean for the markets? Well, listen in.
Global Economics Group expects 4 rate hikes in 2018 and 1 rate hike in 2019. We have actually increased or raised this expectation slightly about a couple of weeks ago, in keeping with how the bond market's been doing and with the inflation outlook. So I think even the equity market would now have to come to terms with the possibility of 4 or 5 rate hikes in the visible time horizon over the next 15 to 18 months. They will also have to come to terms with an elevated bond yield, about 3% or so, being the sustainable bond yield in the United States. And I think that's what global equity markets, including the emerging markets, are struggling with right now. Some of the Asian countries do follow the US monetary policy. I mean, Hong Kong has to follow it exactly because it runs a pegged currency. There are some countries, like Singapore, to a lesser extent in North Asia. These countries have to follow the US rate hikes with a time lag, maybe not at the same time. But broadly, we have seen a concurrent increase in bond yields, both in the emerging markets and in the developed markets. Rising bond yields obviously tend to improve the net interest margins of the financials, because they tend to pass on into higher lending rates, but they don't necessarily have to give high deposit rates to their suppliers.
All right, that's an important opinion. Let's get you another big voice on the markets. Fundamental valuations are still a little further away, says Uday Kotak, as he predicts further correction in the markets. In an exclusive conversation with Shireen Bhan of CNBC TV 18, Uday Kotak says that a single-digit correction in mid-caps from the current levels will make the markets look healthy.
Has the mood soured somewhat? I mean, of course, on account of global factors, local factors, the change as far as macros are concerned, but more so because of the trigger that we've just seen.
No, Shireen, you go back to January, early January, I did speak out about the fact that I was worried about
the possibility of a bubble in the mid-cap side, yes.
In a few stocks, particularly small and mid-cap. So I am glad that the markets have corrected since then, because otherwise you were just seeing first-time savers' monies going into the equity markets in some of the stocks, which could be very easily manipulated as well. So I'm happy from the point of view of longer-term system that the correction has happened. Let me move to fundamental valuations and then to economic growth. I think fundamental valuations are in the process of correction, and we will reach equilibrium at some point of time on a fundamental basis. We are probably still a little away.
When you say little, can you quantify that for us? I mean, how much do you expect?
Markets always surprise you.
What would be a healthy correction?
I think we have seen a close to 8 to 10% correction in the big caps, and probably a 20 to 30% correction in the small and mid caps. So somewhere in the single-digit corrections from here is what I would, in the big caps, is what I would see as getting the markets to a fundamentally more healthy level. Now, whether there's 5%, 10%, I think that's something which would give fundamental corrections. But keep in mind, beyond fundamentals, technicals can move markets on either side quite a bit. And fundamentals are not static as well. It also depends on a lot of changing factors. So you've got to keep on moving your fundamental value with the changes. The good news as I see it today, okay, is over the last 3 or 4 years, whenever we would talk about chasing growth, we had a wonderful macroeconomic tailwind in our favor. You know, oil, we've seen it at $30, $40, $50, and our current account under control, fiscal deficit improving year after year. So we had a wonderful macro for the first 3 to 4 years post 2014. But micro was lagging the macro. This time around, as I speak to you, I think micro has picked up. We are seeing growth on the ground, but the macro tailwinds are not as favorable as they were over the last 3 years. But I don't think macro has got very adverse, so I think there's still enough room for growth. And micro is chugging much better.
But
so
do you believe that
from a good macro to a challenging micro, we've moved to a good micro and a more challenging macro.
No incremental sell-off seen at the index level, but individual stocks, if you're caught on the wrong side, then, well, you're taking a bit of a knock, because the likes of Raymond, Siemens, UPL from the frontline space, all of them are at the low point of the day. There you have Raymond down 2%, Siemens should come up for you after that. We have UPL from the front line as well. But if you've got it right, it's Indiabulls Real Estate. That one's suddenly seen a sharp surge of close to around 6% from the low point of the day, and volumes have picked up on that as well, in excess of 1 crore shares traded. So we'll keep an eye out on these individual stocks where a lot of movement is taking place.
So Indiabulls Real Estate is also buzzing because of the fact that there is a lot of rumor around probably a private equity investment into one of the commercial project SPVs. So that's been keeping that stock alive for quite some time now.
We'll keep an eye out on that. Thanks for pointing that one out, actually. So moving forward, then we have we spoke to Vikram Limaye, the MD and CEO of NSE, about the indices' decision to stop licensing their data, indexes and security data, to foreign exchanges. Also on the clarification of the fake SEBI circular that was doing rounds on WhatsApp yesterday.
I don't believe that it's anti-competitive in any way, because there are these are licensing arrangements and commercial contracts, and from that perspective, obviously, nobody's compelled to share their IP if they don't want to. So from that perspective, these are commercial contracts, and they should be viewed as such. Second, it is in fact quite common to find other exchanges not sharing prices and data relating to their core contracts if liquidity is going to get fragmented and getting built offshore. So what we have done is not different from what actually exists even as policy with some exchanges, where data and licenses are not shared on core contracts because they don't want liquidity to move offshore. So I don't believe what we've done is anti-competitive in any way and different from what many other exchanges do.
What happened last evening when a fake SEBI circular was doing the rounds in WhatsApp group that SEBI has asked NSE to give data on PSU banks. Are regulators looking at that issue right now? Because this could get interesting. I mean, if this circular was part of the market hours, it could have led to disturbing the market mechanism.
When I was asked the question when it came out the first time, I was quite clear that we haven't received any such letter, and that is a factual reality. So I'm sure the regulators would be looking into it in terms of how to prevent these things from happening going forward.
All right, take a look at Infosys. It's one of those stocks which is in the green and adding a fair bit of momentum and keeping the markets at certain levels as well. Now let's take it straight to a CNBC TV18 exclusive news break on Infosys. Now, even as Infosys former CFO Rajiv Bansal really continues the fight for his severance package of close to 12 crore rupees in arbitration process, well, sources tell us that Infosys has in fact sought a large sum in counter claims from Rajiv Bansal. This is turning out to be an ugly legal battle. Rukmini Rao, my colleague, joins us with those exclusive details. Rukmini, good to have you on Business Lunch. What is Infosys asking for? Is it a huge sum from Bansal, and is this also a pressure tactic?
Well, as you rightly pointed out, Rajiv Bansal is fighting almost a year-long battle as far as the 12 crore that he wants to secure, which was a part of severance, and Infosys had stopped those payments. And with the former Supreme Court Judge Justice Ravindran being the sole arbitrator in this matter, what we've picked up from our sources is that Infosys, in fact, in this entire arbitration process, has gone on to lay a counter-claim of over 100 crores in this matter. In fact, what we've learned from our sources is that they're looking at a sum of 135 crores from Rajiv Bansal, essentially for certain acts of his which constitute to breach of trust, and also, in fact, that was a breach of confidentiality. In fact, when we asked Infosys for comments, the company went on to say that they did not want to offer any comments on this issue. However, it'll be interesting to see how this entire arbitration process kind of pans out in the next few days to come. And this is going to be quite an interesting arbitration when the award finally comes out. Back to you.
All right, thanks a lot for that. The other stock on our radar is Motherson Sumi. Had been under pressure for over a week, but managed to recover in today's trading session after the company's management chairman, Mr. Vivek Chand Sehgal, clarified and said he isn't worried at all and about the company's prospects going forward. Their 3 new plants alone will add $1 billion to the top line. Not worried about the near-term transitional losses, though the stock is off the high point of the day, did recover on his comments.
I don't see any weakness on the sales side. We have 3 plants. These are big plants. They have the capability to generate better profitability, and once they're stable, just these 3 plants will add $1 billion to SM. 40% growth coming because of these 3 plants. Motherson has not seen such close, such big plants so coming together. So that's why a little bit people are getting a bit worried about it. We are not worried at all because from our side, it's under control.
And in an otherwise weak market, some of the counters really showing momentum at this point. The Adani Group stock, some bit of good news coming in on 2 fronts, from Carmichael project and also on the Hazira port side as well. So Adani Enterprises, Adani Ports in the green. Some of the pharma counters like Sun Pharma has been roaring ahead, and that strength really continues, along with Aurobindo Pharma also looking very strong. In fact, the metal index, that is also turned into the green, so showing some bit of recovery for the day. Mangla.
That's right, but 2017 was the big year for renewable energy industry in India, with big policy reforms coming in like competitive bidding in wind, record low tariffs and the GST rollout. Remember the wind tariff being somewhere around 2.44 per unit. 2018 promises to be a big one in which the big boys in the space come to the public markets. Is that what you're gathering, Nisha?
That's right, Mangalam. In fact, 2018 could well be the year of the renewable energy companies and large ones, multi-billion-dollar companies really coming to the market with an IPO, as long as the market conditions also support these papers. But they are moving fast as far as, filing in the process of IPO is concerned. I do gather from my sources that both the big companies, Singapore-based Sembcorp's India unit, as well as Sumant Sinha founded Renew Power, which is owned by Goldman Sachs, they both are working really hard for a quick IPO in this particular calendar year. In fact, Sembcorp is a little ahead in the race and is looking like filing the DRHP quite close, actually, in a matter of days, is what I'm gathering. $600 million is what they look to really gain raise from this particular IPO, and $2.5 billion is the kind of likely valuation that they're expecting from the IPO process. On the other hand, Renew Power is also going to file the DRHP, but that could be in April next financial year. But they first have to really beef up their portfolio, and they could be announcing a large transaction in the renewable energy space by buying out Austro Energy from Actis at $1.7 billion. But remember one thing, that all the valuation expectations of the companies really depend upon the kind of road shows, feedback that they get from the investors. So valuations could be here and there, but they are looking at big bag IPOs for this particular financial year.
All right, you made a fair point about the mood of the markets with regards to these IPOs, because remember a couple of these renewable energy IPOs and the kind of wealth that they have lost over a lot of years as well. But we'll keep an eye out on that. But now this is Business Lunch and some fodder for all the car lovers. Rolls-Royce Phantom is here. This is the most silent car from the Rolls stable. 30% more rigid than its predecessor. The luxury car is priced at just 9.5 crore rupees for a regular wheelbase and 11.3 crore rupees for the extended wheelbase.
All right, so quite a pricey car in
Are you buying that?
Oh my God, this is a big buy if you are planning to do that, but quite a feast for the eyes, at least for us.
What surprised me most was the peg for selling this car. It's the most silent car from Rolls-Royce. No one buys it for its silence. People talk about, the buyer, they speak volumes about the wealth of the buyer of this car. So ironic, there you have it. But with that, it's a wrap on this edition of Business Lunch. Stay tuned.